Ladies and gentlemen, so here's what we got going on for today. Today is Wednesday, and on Wednesdays, I love to have an interview with a trader, someone out there in the community, someone out there whose goal and whose mission is to enrich lives, someone who likes to assist, help, and educate and entertain. And today is no different. We have Stephen BigBeat Orr on the line. This is a gentleman I met in person about a year and some change ago, but we have communicated online for a few years. He's he's big in real life. He's big in the trading community. He loves trading. He's very, very good at it. Stephen, welcome to the show, man. Can you hear me okay?
Thanks, man. How are you, Jeremy?
Dude, doing so good, man. How are you?
You're always impressed by your enthusiasm of the trading world and just life in general, man. I love it.
Thanks, dude. Thank you, man. I appreciate it.
You know what's interesting, Jeremy? You know, I've been trading for 28 years. I'm only 46, but I've been doing it since a little as a kid. And you know, one of the most beautiful things about the market is there's always something every single day, every day in the market. Now, back then it was only Monday through Friday, but you know, now it's every single day, even Saturday and Sunday. So there's always a new opportunity, and you gotta just love that, right?
Yeah, it's amazing, man. It's amazing, and there's a lot that I want to talk to you about because you have been doing it for a long time.
Yeah.
And you're one of the people that I follow religiously on Twitter, and I'm on your Slack channel, and I just love everything you post. Tell us a little bit about your story, man. How did you get started? If you're trading, you've been trading for it since you're a little kid. How did that all go? Give us the whole.
It's very simple. Yeah, when kids wanted to be astronauts and you know, firefighters, I wanted to be a stockbroker, right? And so my parents were like, they had their own accounts, and they weren't the happiest back then. And you're talking about 1987 when the market crashed, and you know, they're like, okay, well, I don't know, what can we do for our kid, you know? So they took me to their stockbroker, right? And she was a nice lady, but she pretty much told me to shut up and sit in the corner and don't say a word while my parents left. And I was like, wow, that's not really something you want to tell a kid at my age, but I don't care. I'm really going to do this thing. And I really did. And so I spent all of my time trying to find a mentor. And if I can tell you anybody anything, if you want to be in the market world, you got to find someone who's been doing it longer than you, right? Someone like you, Jeremy, who does it every single day and lives it, right? And that way you don't get all the bad habits you pick up by not being a long-time trader, and you pick up the good habits, right? And then you try to expand on those and find other mentors, right? I mean, seeing the other day, watching, you know, being saying that Warren Buffett is an idiot just really bothered me, right? They're one of the best in the world. And so I've completely put myself around that position of having mentorships. And so what happened was 1992 came around, and I wanted to go work in the government, all the while trading. So I ended up in the White House for 8 years. Left there, did pro sports. I did lots of other companies too as well. Again, one of the things you can always do with trading is you can always have it as a backup or side trading, or doing it permanently in between jobs. You can continue doing it like we are now. But then about 10 years ago, I decided that I wanted to go back on Wall Street, and I did. I ran money.net for a while, and of course, Benzinga, a senior vice president of both of those companies. And now I'm happily doing it back again on my own once again. And actually made a ton of money, so I'm very happy about that, right?
Yes, I think that's incredible, man. So tell us a little bit about your trading. What style do you focus on? Let's dive a lot into that.
Right. So I have several different styles, and I always tell people one thing. If you have one style of trading, you are not doing it right, right? The idea here is that you're ahead of the game, right? So when people ask me what kind of indicators do I have on my charts, I said, well, here's what I have right now, but 3 months ago, I didn't have those indicators on. And I tell people you need to learn every indicator so that you know when to put those indicators on, right? Right now I have money flow and volume because volatility is a real big deal, right? VXX, we've got to find that volatility. Volatility wasn't that big of a deal 6 months ago, right? Because the market was just going up. So MACD was the perfect one. So I try to stick with what's going on and try to be ahead of the game. And being ahead of the game for me always means thesis trading. So I always try to have a thesis, an idea of what's going to happen in the future. And I try to create a long-term plan and a short-term plan. So for example, when the market crashed on March, back in early March, on the 23rd, when I'm watching CNBC and they're saying the world's going to hell, I took the contrary position and emptied out my savings accounts and started buying as much stock as I possibly could indiscriminately, right? And I kept buying until middle of April. And at that point, I started peeling stuff off and then going back. Now, that's not the trading style that I would have had during the 90s with the dot-com bubble. That was just buy any pets.com and continue to go. But right now, we're talking about today, is sitting on my hands today, right? So each style of trading needs to be fit to what you are or where we are in the process of trading.
And when you say thesis trading, what do you mean by that?
That's a good example. Okay, so for example, people have been asking me, I've been really bullish on the cruise lines, and it's not for the same reason that everybody else is, the Robin Hooders out there. For me, Royal Caribbean and CCL and NCLH was very simple. I went to buy a cruise. I was going to go to a cruise. I thought, okay, it's going to be very cheap. I went to do that, and guess what? There were no cruises for sale, right? They were sold out. They brought back some of their inventory. I had a cruise already planned for Panama coming up in December. I told my wife, I said, look, let's not do that. We're going to probably get some free cruises. And we did, and we took advantage of that. And then I asked the guy, hey, you're booking this cruise, but how is cruises going right now? It's out of sight, Steve. Like, everybody's booking. I'm saying, perfect. That's exactly what I want to know. That's a thesis, right? So Royal Caribbean. Okay, well, then now I'm going to go look at the other cruise lines. I'm going to look at other things like Marriott, and I'm going to look at, all those things that I didn't expect. And I didn't just buy them because they were cheap. That's what they did back in early March, right? I bought them because they were going to be sold out. Now, my thesis here is still the same, that we're going to be okay, but that may be a bit of pullback, right? The virus is going to come hit us a little bit more. So my thoughts here are, in building that thesis, is that, okay, I'm just going to build a position for longer term now, and I'll trade it out. So instead of having a full boat of 100 position, I'll go 50%, and trade out 50%. So own 50% long term, and the other 50% of that cash being trading it back and forth.
Got it. And I was just taking some notes. Are you doing only shares? Are you doing calls? Are you doing puts?
Oh, absolutely. I love options. I think it's one of my rules of, options is not scary. Learn them. I just taught a kid the other day how to trade options for the first time. He made $5,000 on his first play, right? Options are not scary, and you can use it either as a hedge or insurance, as I always say, or you can use it if your thesis is really strong, buy that call or buy that put based on your thesis. You keep trading until your thesis change, right? The stock may pull back, but has your thesis changed? And if it hasn't, then continue that position. But if your thesis changes, get out of it, right?
Yeah. Well, how do you know if that changes? I mean, are you the big question is, a lot of people say, who do you know to follow? Who do you know to listen to? Do you go to research? I mean, because you're not going to specifically just create that on your own accord necessarily. What do you use for that?
Well, you know what? I always believe in the Peter Lynch method of trading, and that's two things: trade what you know and do your own homework, right? A good example of that was I bought a new home, and I needed to go buy, some stuff for the house, and we're in the middle of the COVID virus, and it kind of sucked, and I was like, okay, well, you know what? Probably what everybody else is doing, just like me, Home Depot, right? Exactly, HD. So everybody's fixing up their house. So I went on March 23rd and I doubled, tripled, quadrupled down on Home Depot. I literally emptied the accounts and bought Home Depot. Now, I dumped most of it at $230 a share. But I bought heavy calls. I bought $200 calls, which paid out pretty nicely. But then when I felt like they were getting a little frothy, I took the options off and stayed long in the stock. And then I sold a lot of the stock off too as well and held back. And now I have the position that I want the rest of my life. Right.
Nice. Okay. And so, I mean, you'll hold that for a long time then.
I will now on this one. Yes.
Okay. And it's interesting that you take a different approach, which I can totally respect. Regarding, if we go back a moment, when you're saying learn everything, right? Put yourself in there and try to figure out what you like, what you respect, what you appreciate, what resonates with
right.
you. And this is coming from someone that you kind of drink and breathe this stuff, man. Like this is what you do all the time.
You know, it's interesting. I had a guy the other day, you know, he would talk to me all the time. He's like, I've lost so much money. What do I do? You know, and I'm like, well, okay, let's talk about it. You know, what stock did you buy? You lost so much money on. He goes, Nikola. I said, okay, well, what exactly do you know about Nikola, NKLA? What do you know about the stock? Well, I know that they're kind of like a Tesla. Okay, but how do they make money? Have they made money? What do you know about the company? I bought Nikola. I bought it on the IPO. But he couldn't explain that to me. And I said, then you need to stop. You need to stop trading like that. What do you do? And he goes, well, I'm a plumber and I build homes. I said, oh my God, do you know Lennar, LEN, or DR Horton, DHI? And he's like, yeah, of course. And I said, okay, well, tell me a bit about them. Tell me, you know, how are they doing right now? And this was a couple months ago. And he was like, they're doing great. And I said, exactly. You know more about this than I do, and I will look to you to give me, the ideas of what they're putting in these homes, right? For me, for example, a good example would be Wayfair, ticker W, right? Everybody has been buying cheaply and buying this. And look at it. I mean, it's exploded, right? And I didn't trade it. I just bought it and went long with it. And that's kind of how we thought, because I thought that people, not only, you have to look at it from perspective of buying the home, yes, but what's going next, right? What's the next process of doing that? And if you ask me about a thesis, very simple. Interest rates are low and they're staying low, right? Well, okay, I know that because the home buying is off the charts. So what's the next level of this? How do I create a thesis? And for me, I think if interest rates are zero, and I always tell people to buy low and sell high, right now, financial banks are cheap right now. And Wells Fargo, WFC is a good example of that, right? Buy things that are very cheap, look for them and play that game. Look at that sell-off that happened back in March, in early February and January, and boom. I mean, now can you hold it long-term? Probably. Can you trade it? Absolutely. It's one of those things, and in its tight trading range, options are even better with tight trading range with straddles, especially right here, right?
Yeah. Tell me about your option plays. Let's go back to Home Depot and just kind of walk me through that. So when you're playing those $200 calls, what expirations were they, and how do you know when to sell your options?
So in this situation, I was thinking that we would have a V-type rally, and I didn't expect a V-plus rally here on Home Depot. I expected a V rally. And so I looked at and saw what was the top before the sell-off. Took about 20 points off of that, and you'll see that I got to about 200. That's what I thought we'd get back to. Now, I will tell you that at 145, when I put those on, it got me a little nervous, right? When we got to about 190, I was happy, but the market did fall back. We remember that time when it fell back. So it got me a little concerned. I didn't get too nervous about it. I actually bought more stock, left the options on, the calls on. I had bought, at that point, I bought 3 months.
Oh, you still there? Can you hear me? Give us 1 second, guys. I don't think Steven muted himself. Looks like it just kind of cut out. By the way, type in a 1 if you guys can still hear me, just to make sure. I'll pause recording really fast until we get him back. Okay, perfect.
Weeks after weeks, I peeled them off every other week, right? And so I had them out, and when I peeled them off, I left the long-term ones on. And I only have 1 call left. I actually have literally just 1 call left. So I probably will pull it off, and it's a December call. And it's still sitting at 200 in case it goes higher.
Gotcha. Okay. So is it always price-based? Is it return-based? Is it
I like returns. I like percentages. I look at numbers like that. Anything over 25 to 50 to 100, I'm happy. We all know that we all are shooting for the home runs. I don't always shoot for home runs. I shoot for singles all the time because I know the home runs will come, and they do. Right? But I feel like so often in the options world, everybody wants that 13 to 1,500% return. And if you do that every day, you're going to be broke, right? Because you're always shooting for the fences. And, even the best home run hitters in the world, Babe Ruth, struck out more than anybody. So the idea is to keep hitting those singles and playing weekly calls. Now, I'm very strong weekly calls. I do it all the time. And the SPY. I do it all the time. If I see a pop somewhere, I'll take the opposite run. Right now, I'm flat. I don't have any options on the SPY, but I was long the SPY calls. But every single massive pop, I put a put on, and I put them over for overnight for the weeklies because, quite frankly, I felt like there was so much run up that profit taking had to hit. It didn't hit until last week, which I was very happy about. And then I went bullish. I think I put that on my Facebook page that I'm bearish, and then eventually 2 weeks later, I said I'm bullish. Now here I am. I'm bullish. I'm still bullish right now.
Yeah.
I think we break the tops in about 3 weeks.
God, yeah, I agree with that. I agree. Speaking of that, tell me any other stocks or sectors or just something that you're looking out for, keeping your eyes on. What's BigBeat about to do?
Well, quite frankly, I think that the people have been asking about that right now, and infrastructure is hot right now, and whether or not politically the president can get it passed, infrastructure is going to be really hot. And one of the stocks that I'm looking at, I know we looked at X, I look at USCR, concrete, but I'm going to tell you one of the things that I saw out there when I was do my channel checks is asphalt, and that's MLM. That's Yep, it's Martin Marietta. They make asphalt. I really like this stock. It's been good, and I think that if you have a longer term perspective, you'll be extremely well, especially if it's $1 trillion infrastructure bill coming out. I also like Vale, VALE.
Okay, there we go.
Which is U.S. Concrete. So, same situation here. And you can see that, if you've got a good perspective on it, you should be good. Okay. Yeah. And you can make some long-term calls on it. I'd say almost 2021, somewhere in the summer next year. Yeah.
What time frame do you normally look at? Daily charts, weekly, hourly?
Yes, and yes. What's interesting is if people see my screens, they're kind of blown away by, I have it set up where I can click to any time frame within seconds, right? Especially when I'm making a position, I'm not looking at just a 5-minute position, right? I'm looking at, can I be someone who owns this position as well down the road? So if I'm buying a stock or selling with something, I want to make sure that it's something that if it goes against me, can I be an owner of this company, right? If I'm buying Tesla, do I feel comfortable owning it at $900 a share? Or if it goes to $20 a share, which who knows, am I comfortable with that? And 9 times out of 10, if I say no to myself, then I'm okay with it. I won't play it. But if I'm playing a day trade, heck yeah, I'll play the single day. I'll play the 1 minute, the 30-second, charts flying away. But no, for the most part, I want to make sure that I'm able to stay lucid in the market. I don't want to be stuck in a position. As I always say, I don't like being married to a position.
Got it. How many positions are you in at once? Do you have any rules like that or anything?
If you include every position of every direction, or just the number of equities?
Oh, good question. Let's say every direction.
Oh Lord, a little over 1,100.
Got it. So you're in a lot. You're playing a lot.
Yes, of course. Yeah. Mm-hmm. So when I say that, if I'm in a Nikola call, actually, quite a few Microsoft calls, MSFT. I literally have 11 positions just on the weeklies, right? Then I've got several on the longer term, on the monthlies.
So let's go back, man. How'd you build that up? Like, at what point did you go, I got this? Because at some point in the career, we all take the beating to the face with a baseball bat, which is some random stock. What was the big turning point for you?
Pets.com. I'll be the first one to admit it. I'm that old. I'll admit it. Look, the .com bubble was one of the most beautiful times of my life. I was able to, make a ton of money. And so when I did lose my butt on Pets.com, I didn't care because I'd made so much money. Same situation not too long ago. I guess it was Netflix, NFLX. Same situation. I was a couple of years ago. I lost about $15,000 in 7 seconds. It slapped me in the face, but it didn't bother me because I'd made almost 180, so it didn't really bother me, right? But it's still a slap in the face, and I don't like those slaps.
No, stops are not amazing.
Right. And it hurts you, hurts your ego. It hurts everything that makes you a good trader, right? And if anybody tells you having an ego makes you a bad trader, they don't know what they're talking about. You've got to have a healthy ego, not a strong ego, but a healthy ego, right? You gotta believe in yourself, right? If you don't believe in yourself, nobody else is. And so whenever you make a thesis or make a trade, you're making part of your life. That money is yours. I mean, one of the theses that I have is wealth preservation. That is the name of the game of this whole market, is wealth preservation. Your money is your money. Now keep it, and make more money and put more money in your pocket. But the truth of the matter is, not a lot of traders can't do this daily and every day. Why? Because they don't have the patience. They don't have they don't sit down and actually learn the markets and learn what's really going on. If you're looking at stock twits all day, you're not doing it right. You need to be just like you are, Jeremy, with other traders and these real life traders, and actually being a part of what's going on. Knowing and understanding the market. Okay, Powell said this, but what did that really mean? Right. One of the things that I found in the markets is that, and this is one of the biggest things that people should be watching right now, is the 10-year Treasury note. Most people don't even know that the yield is right now pushing the market. Right. Most people just think it's just, pajama traders at home hanging out. That's not. It's the bond market is having to push up the interest rates there, the yield, because nobody wants to buy bonds or buying stocks. That's what's pushing the market up. And I think that, for me, is the level of knowledge that everyone should have. It shouldn't just be one stock for one level of sector. You need to really know the whole, as I always say, the whole world matters. Right. Yeah. So whatever happens in Japan may affect us. Good example of that is Apple. They're right now everybody's buying Apple indiscriminately, I guess. And they may. Right, and they may have the lines of feeding them their parts maybe going out the door. In China, it may have some problems. So
interesting, love it. When you mentioned that you're trading a lot of positions, do you have some that are short, some that are long? Do you do portfolio management? What does that look like?
Yes, both. I mean, if you're just long, then you're going to get hurt, right? You need to make sure that you understand the short market as well. It's always stairs up and it is elevator down, right? I was banging the desk back in December that the market is overbought. Now, I did not know that the COVID virus is going to hit us the way it did, but I was pretty heavy SPY puts there, right? And that's a massive situation there. I was very long SPY puts going into it, and made a small fortune there because the market just sold off, and it just sold off hard. And I did still have a portfolio, but that money was extra money to be able to put back into the market, right? So it's fresh cash, and I always say fresh cash is always better than old cash.
It's true. It's a very good point. When you were talking about your trades and your positions and your money and all that kind of stuff, what do we do with money as traders, man? Like, at what point? Like, I know enough's never enough. That's fine, but what are we doing with it when you make it?
What I was doing today was interesting. Today was my day, I told all of my boys and girls to sit in your hands. And it was literally the hardest thing for them to understand. And I had to explain to them, sitting on your hands is an actual trade. I don't know how to explain that to you, to people, but it really is a trade, right? Just relax. You have a portfolio, maybe take a break. And so today, what I was looking at was the thing that's been beaten up quite heavily and still popular right now is real estate. So I was looking at even more real estate right now. I always tell people, look at the beaten up markets. That's where you should be buying. Right. And when the market crashed in 2008, I bought a house. Right. When I sold that off, doubled my money there, sold it off, bought a beach house. Right. I'm getting ready to sell it because it's doubled in price. And I bought another house on the cheap. So real estate is always, whatever's in favor is out of favor somewhere else. Right. And I don't believe that gold and crypto are hedges, and both of which I own positions in, but I don't believe they're hedges. The hedges is out the door. Your hedges is your options. If you want to hedge something, play the option market.
I like that. So when you mentioned hedging, how do you hedge with options? What does that look like?
Well, it's very simple. If I have a big portfolio, I'll look at the SPY again. I'll be buying puts on the SPY equal to the balance of my portfolio. So if you have a portfolio of 100,000, buy five puts, 5 SPY puts.
Got it. And how long do you date those out for normally?
Usually monthlies.
Okay. Now, do you ever turn those into any kind of like cool calendar spreads, or do you ever sell puts against the long puts if they're bouncing, or just you literally buy the insurance and you're just holding those for whatever?
You know, keeping it simple is always a play,
Yeah.
especially if you have so many positions that I have on. Do I like putting spreads on? I do. And do I do it? Yes, but it's not. That's less than 5% of my portfolio of my options portfolio. A good example of that was I have a spread on Microsoft. Like I think I said that earlier. You know, I have some long dated calls and I have a few long dated puts just in case. But I'll be pulling the puts off as we push up with Microsoft. I believe my thesis there obviously is the Xbox and Teams is doing so well that they'll continue to push higher.
Yeah. What is your take on some of these new companies where it's just purely a stay-at-home play? So, for example, the Netflix, the Zoom, the Slacks.
So, Jeremy, I am 46 years old, and I can tell you the one thing I don't like doing is staying at home. And a lot of people don't want to stay at home. When the last time we did a webinar, you and I did, we talked about Zoom. You called that one out perfectly. You were right, dead on that one. You bought that back in the 60s. I was highly impressed with that one. I didn't expect it to go like this, but when the world changed, we had to change with it. And I always say, play what's in front of you, right? It may not be the best software, or may be the best software, but you know, when we're now that the whole world has changed in the virus situation, then obviously the stock just exploded, right? And I even use Zoom now. We all have a Zoom accounts now, right?
Yeah.
And so that's great. But you and I both know, I mean, we've been on this planet long enough to know that this virus will go away. There's no if, and, or buts about it. And I look at it from the perspective of history, polio, smallpox, whatever, it will correct. And so will the stock. If I were to do this, and I would put a position on, I'd probably be buying lots of Zoom puts, ZM puts, probably put them on tomorrow or so. Probably back down to about the $150 level, somewhere around there. That last push up is probably just froth.
I mean, it's only up 263%.
Only, you know, and think about it. If you bought the 150 puts, say for December, and the COVID virus does get a little bit under control and people are okay, and we're not having stuck behind a screen, then yeah, you can see all that froth coming immediately off. Good example of that. Look at Royal Caribbean stock today.
Royal Caribbean. What are you doing on it? What's your thoughts?
You know what? Buy. Just keep buying. And this is a $200 stock before the crash, and they did something very interesting. I like RCL more than the other ones, right? For one reason, their bonds that they had were collateralized off of their own ships. Interesting, right? And so if they don't pay their interest, right, then they just sell a ship off. They do that anyway, right? They sell their crappy ships off to the other companies. And so it didn't hurt them at all. So Royal Caribbean will do quite well.
I think big term. I mean, long term, yeah. It's
so I mean, this is not a short term play. I mean, I picked it up at $25 a share. You know, I still have it. I didn't sell any of it. I don't think I ever will.
Do you ever sell covered calls on something like that, or you just
every once in a while? Yes, covered calls are great. You know, that's a good pay down as you wait. But right now, man, I don't know. It's really kind of scary right now to play either way. You know, if you watch Fibonacci at all, if you put those on your charts, and I'm telling everybody right now, use Fibonacci on your charts, because Fib right now is telling you everything you need to know. The pullbacks on each one they're right on the lines, especially on the SPY or the SPX or the SPOOs. Fibonacci's return has been right on the numbers.
Yeah. Fibs are strong, man. They're magical. That is for sure.
And they're not for every time, right? They're not for the market just keeps going up, up, and up. But when you've had a pullback like this, Fibonacci sequence is magical, as you said.
Yeah, I agree. Hey, Steve, question. When you mentioned earlier, you talked about practicing the markets, being in the markets, really putting time, putting energy, and putting work, and doing your own homework and things of that nature. Which books or videos or programs or whatever did you go through that you found helpful?
None. I'll tell you right now, the first book I read and the I mean, I could say Graham's Investors and all that Warren Buffett did, and I can say Snowball, his life. But for me, it's One Up on Wall Street by Peter Lynch. Anybody who gets into the market, I tell them to read One Up on Wall Street by Peter Lynch. And it gets you back to basics no matter how many times you look at it. You can read every single book out there. You can learn the markets, but there's only literally one way to ever learn the market, and that's just by doing it and not by paper trading. I tell people, don't paper trade. It'll mess you up psychologically. Just trade the market, and you just understand you're going to lose. You need to just keep playing and keep playing and keep playing until it hits. I think John Nigerian said it best the other day. Like, man, it didn't click in my head for long term for options, and then I just kept playing. I kept playing, and it eventually clicked, and it's the best thing that he ever did in his life. Right? It's about keep the game going.
How long do you think it normally takes for someone for it to click?
4 years.
I love it.
Yeah, I'm not gonna lie to you. I mean, dude, so many people are gonna say, "Oh, well, I learned the whole market in 2 weeks," and I go, "Really? What's your best? What's your best stock pick? I'll short it. Like, that's exactly right." JP Morgan, said it's a shoe shine kind of trader, right? When the taxi driver is telling me stock picks, there's a problem, right? There's a reason why we call them pajama traders, because they haven't done the suit thing yet, right? And so many people want to think that they're just these gods of trading because the market goes up. Well, I'm going to tell you right now, my favorite saying in the market's very simple. And I'll say it one time only here. A good captain is not made in calm seas, right? You have to understand how to get through a bad market. If you have never lived through a really bad market, then you don't really know how to trade. If you just started trading during the virus thing, and when the market crashed and you put your stimulus check in, yes, that's not a trader. I mean, pull up a monthly chart and go all the way back to the very beginning.
Yeah, let's do the DJI real quick. All right.
And you'll find that, gosh, I do this all the time. I always say, if your time frame is a year and a half, you are so good, right? Because you'll always make money. The market always goes up. 87, 29, the massive, sell-off in 08. All of these sell-offs, we still pushed higher. Inflation will continue to push higher. It's just whether or not you have a longer-term goal. And so many times right now, traders just think that their best trade is because they made $500 this week, right? And that's great. And I'm going to put that money in your pocket, but $500 times the interest rate over 30 years, literally you'll buy homes, right? And I bought homes because of this, right? And I'm telling you right now, the best part about this is that you can't lose. There's no losing in the market if you have a longer term perspective. But you will if your perspective is, okay, I've lost 60% of my money here. I don't know what to do. I remember in the 08 crash, before it happened, I banged the table calling my parents, get out of everything, sell everything. Okay. My parents were nervous. They didn't know what to do because they had made pretty good money. They called their broker. The broker said I was, don't believe Steve. He doesn't know what he's talking about. And that broker no longer is a broker now, right? And why? Because they were believing the hype. They weren't looking behind the curtains. And sometimes you have to look behind the curtains. And right now, the curtains are telling you right now, the Fed. The Fed hasn't pumped this much money into the market. The balance sheet is sitting at $7 trillion. That is so much M2 money going in. That's the velocity of money going in. We've never seen this kind of velocity. And where is that money going? It's going into the stock market, right? And we're going to be on a sugar high. And I'm telling people, you trade what's in front of you. As I've been saying it earlier, keep trading what's in front of you and you'll make it. But eventually you're going to have to slow it down a bit, and you're going to have to put those SPY puts on just to protect that portfolio.
Is that kind of your go-to SPY puts generally?
I mean, it depends on what's hot right now. I would tell you that the Russell 2000 small caps are hurting right now, right? The smaller companies aren't doing so well. That's a big deal, right? And so I think there's too much frothiness right now in the. Yep, you got it. Yep, IMW. Yeah.
Got it. Very interesting. And
what's interesting is right now is that bigger companies now, the white collar employees are saying, look, I understand the restaurants all lost money, It's about to hit us too. The unemployment rate and the U6 unemployment numbers right now are sitting at 22, 23%. That's silly high. I can't even explain how high that is. And those are people who are not only in the unemployment line, but have also just dropped out of the rolls completely. We're getting closer to that already. And those people aren't going to go out and spend money on a new couch at Wayfair, right? They're trying to eat. But now you're getting to the point where bigger companies are going to start laying off. The 100,000 plus a year people are going to get laid off, and that's going to be a problem. And those are your bigger companies, and that's a real issue. And if that happens, then the whole market may just fall apart at that point. But I don't think so. That's not pretty much what's going to happen right now.
Right. What is your just for fun and giggles next 6-7 month prediction?
I think right now it's all about one thing, whether or not we can understand psychologically and handle the stresses of the virus. One of the things that I've noticed that's changed is the philosophy of people right now. 6 months ago, everybody would have just gone out and not thought about, all of the medical side of the virus, right? Washing hands even more, or, I was out this weekend and I had sanitizer with me and nobody said no to sanitizer, right? Everybody said, yes, I'll take it. So that psychology has changed. I think that's going to help control, people putting masks on. Those things are going to help with the spread of it, which is good. So I'm thinking that my thesis here is the market does go higher, but not as much higher. So I'm saying if you are a trader, to think about putting on a strangle, right, on the SPY here. Meaning,
yeah, I was talking about that yesterday.
Yep, meaning that buy calls higher and buy puts a little lower, hoping that you'll stay within that frame. That's why you need to watch the volatility, right? We need to get the VXX underneath 30 for me before we start to feel that the market needs another push up. See right there, you can tell that nobody really knows.
Man, dude, this thing hit almost 80. Like that was crazy.
Yeah, and when it did, I shorted the VXX. That was pretty simple, right? And then let me tell you, the TVIX is the most broken piece of equipment on the whole market. Do not trade the TVIX. It's broken. I mean, it's just totally broken.
So when you say broken, what do you mean by that?
It doesn't work, right? It does. It's not really pegged to anything. It's made up. I mean, there's no way they can hit 3 times the volatility index and be able to pay for it. They know that, and in doing so, they have had how many reverse splits have they had over the last 10 years? I mean, so many. And if you want to make money, short the TVIX over time, and you'll do just fine, right? Yeah.
That is wild, man. That is wild.
And the fact that the SEC even allows those kind of products blows my mind. I mean, think about it right now. Think about it right now. Think about Hertz, HTZ.
Oh my God. Don't even get me started.
How many traders went out there thinking that Hertz was going to go? I was like, are you kidding me? I hope that Hertz is delisted along with the O.J. Simpson, I mean, it's just – it's crazy. He used to be the spokesperson for Hertz. And so, there's so many things about this company that was bad. And why were people picking the stock up? Because it was cheap, right? Yeah. That's what, and I don't think that buying stock cheap is the answer, right? I like buying things that are beaten up, but I don't like stocks that are cheap. Their debt is out of control. So I always tell people fundamentals are very important too, right? I always look for high debt yield loads. If they can't pay their debt, they got a problem, right? If their cash flow is down, it's not good. Now, if their cash flow is good and they're not investing, even better, right? I don't like that. I like to see companies investing in R&D. Now, I don't like Apple, but they're investing in R&D. They're investing in the next products. And so I like that. And a good example of that for me is NVDA. They always have a new video card out, right? And I didn't really understand NVIDIA until I bought another computer, right? I'm like, oh my God, a new video card is amazing. That stock's going to keep going. It's going to probably, if I were to bet, I would probably say buy $400 calls.
Expiring when?
I would probably have them expiring probably in October, November.
Yeah.
Yeah.
Big bet call, folks. There you go. I agree. Actually, I think that NVIDIA could fully hit 400 at some point. I mean, like, why not? What's the trend right now?
Well, for me, the thesis here would be that I think a lot of people start to come back to work a little bit, we're hoping. And if that's the case, then their computer that they had 6 months ago, back in January and February, needs to be upgraded. And so those upgrades are coming in. Number two, I think we're going to have a big run on crypto, on Bitcoin especially. And the miners just had a big problem with the halving, right? And so they need to upgrade their machines in order to continue mining at the same level of which they were getting at their cost basis. So they're going to have to upgrade their video cards as well.
I heard you had bullish positions in crypto.
I have lots of positions in crypto. I do sit on the American Blockchain and Cryptocurrency Association. So, but I'm not that bullish in saying that you've got to go out and buy Bitcoin. I don't do that. I don't need to. People ask me all the time, like, when should I buy Bitcoin? And I go, yesterday, today, and tomorrow. Mm-hmm. But you don't have to go out and spend your $100,000 to buy Bitcoin. Just buy bits and pieces, $100 here, $100 there. Before you know it, you'll have a position. I mean, I famously sold, in New York City in 19,500 Bitcoin, right? I dumped all of my Bitcoin that I'd had from literally the beginning, yeah. And because of that, people looked up to me for the idea of crypto. Look, I want to see mass adoption of crypto. But for me, if you want to follow the world and understand how the market works, you need to follow the Dixie, the dollar. And you got to follow the yuan, the yuan, and the yen. Those three currencies alone run 3/4 of the world. You can say, okay, maybe the euro a little bit too, and maybe the pound. But for me, it's the Dixie, the dollar. That's what has. And how do I know that that's most powerful? Because it's what oil is based in. You got to follow oil, right? And people go, okay, well, how the hell does oil, the price of oil affect the NVDA stock price? Well, I can tell you, it would take me about a minute to tell you, but that's the whole point, right? Everything in this world is connected, and every price of everything is connected. And so when the price of oil goes up, most people don't know this, but only about 10% of oil actually makes gasoline, right? Yeah. And so sometimes the crack spread can be really wide. That's the difference between the price of oil and the price of whatever, heating oil, natural gas, gasoline. And so what I'm always saying to people is, if you know what the crack spread is, you'll be just fine. Crack spreads is the answer to everything in the oil market.
Now, do you trade Forex?
I do, yeah. I trade currencies every day. In fact, I just moved over pounds into dollars yesterday, as a matter of fact.
Man, killer! I don't trade Forex that much. I mean, at all.
I get it. It's not as sexy as everybody wants it to be. I'll tell you what is sexy is gold versus the dollar. I think the gold market is right now it's hot. Right? Yeah. Because everybody thinks gold is going to just keep going up. I mean, there are a lot of people out there like Peter Schiff that just thinks gold's going to 5,000. I'm going to tell you, look at the chart. You can see it right there. 2008, 2009, when the world was going to hell, we got up to about close to $2,000 an ounce. Yeah. We can't even get, I'm saying right now, $1,700 an ounce. I'm thinking we go back to $1,200 an ounce.
Yeah. So I think 5,000 is a stretch. At some point.
Yes, it will. If you have a long term,
happen like 10 years from now.
You got it. If you have a long-term perspective, okay. But right now we're not. We're trading, right? We got to trade what's in front of us. But the thing about gold right now is that there's so much still in the ground. There's still a lot of it. And number two is India has changed their thesis on holding gold. Their dowries aren't nearly as big anymore. When the guy in the girl gets married over India, it used to be where the bride would douse thousands and thousands of dollars in gold into the groom. They don't do that anymore as much, and that's really put a pressure on gold as well. The scarcity of gold isn't quite. Anybody can go down to a local pawn shop and get gold nowadays, so it's not that scarce out there. What's pushed the price up is people thinking that it's still a hedge when it's really, really not. And people have asked about Bitcoin. It's not a hedge either. Yes, there's a scarcity of Bitcoin of 21 million, but it's not there yet. So don't buy things based on scarcity. I'll tell you what is scarce right now. If you want to buy it, and it'll be a good buy pretty soon. You're asking me what do I do with money that after I make it, and that's buying art. Art is probably
Ooh, yeah.
Yep. Art is probably the best thing that you can buy. The only problem is something you can't dump, and it's something you got to love. So if you have a good eye for art, that's interesting.
Love it. I've actually heard that a lot. Yeah, man, I've got that a lot from a lot of good investors. And there was actually an ad on my Facebook about like some type of art class I could take. I didn't dive into it, but that's something I need to do and spend more time on. I know a little bit about rare books, but I don't know nearly enough about art.
Rare books are really good if you're in New York City. The rare book world is very, very popular, but art is the number one thing around the world. And the reason that the art is so popular is because I can't do it.
Yeah.
I can't do it, right? And most people can. It takes a special person. I have a lot of Peter Max in my house, Leroy Neiman's, looking around my own room, I guess. Lots of art from different people. And so, but the problem is I don't want to offload it, and I don't, so I'm always going to keep my art, right? I'll never want to get rid of it. And so that if you're looking for art to be a wealth indicator, then it's not going to help because you can't sell it as easy down the road. But it's a great place to park your money.
What's your take on the US dollar, Canadian dollar?
The loonie. What's interesting is we can't cross the borders. I tell you, going in Detroit, I don't like Detroit at all. I like going into across the border, right? And the casinos there. And I'll tell you, we can't do that. So that's not a good place to be. And I will tell you that a lot of people right now, Canadians, are buying homes in Florida, but can't come down. So it's a problem right now. So then dollars strengthening is good against the Canadian dollar. So I don't see the loonie doing too well in the future.
Got it. Well, man, I appreciate your insight, Steve. Thank you so much. I have your Twitter up. If you guys want to connect at any point with Steve, I do follow him and been following him for a while. Where else can I get a hold of you, my man?
LinkedIn, most definitely. Twitter feed for me is just a place I park. I look for other Twitter feeds, but my LinkedIn page is where I'm pretty much at.
Right on. Love it. Well, I'll make sure to get this recording out, but thank you for being here, dude. Thanks for your energy. Thanks for your enthusiasm and just thanks for your insight, man. It's always good to spend time around veterans like yourself who've been in all kinds of markets and just gain insight from people like yourself. Because again, I love the markets, but I have only been doing it for 11 years. So I have to learn from other people who've been doing it longer. There's not that many.
And just because I've been doing it longer doesn't mean I'm smarter. Okay.
That's correct.
There are a lot of people here that have been doing a lot less and know just as much. I will just say that one of the things about being in this a long time is knowing how to weed out the bull, is to know how to find someone who's real and who's not. The Wall Street is so full of snake oil salesmen. I can't even tell you how full it is. And even in financial news as well, it's just snake oil salesmen everywhere, right? Getting you to buy something that you don't need or a product you don't need to get ahead. And real live traders is definitely not one of those. I mean, you guys are literally one of the best out there. You really are doing what I always want to say is leveling the playing field, helping those that are starting out and helping those keep going like myself that need that boost all the time. So I really appreciate, Jeremy. I really appreciate everything in your friendship.
Dude, man, back at you, dude. Thank you so much for your time and thanks for your energy and thanks for your friendship, my friend. I appreciate it. Have a great rest of your Wednesday.
I look forward to the next time.
Likewise. Take care, man.
Bye.
All right, folks. Oh, I love chatting with amazing people. That's another one. BigBeat, Steve, BigBeat Orr. 26 years into the markets. Always can take away one thing. My big takeaway on that one, NVIDIA's going to 400. That's my takeaway. I like it. And Mr. Squiggles, a.k.a. the pink line, got the drawing on. I am game. I like that trend. Looks good. Whew, you guys like the interview as well? I did also. Greg says, thank you. Eve says, awesome stuff. The Diesel says, great interview. Robert says, be wary of old men in a profession where most die young. That's correct. That's correct. Brandon says very good. Awesome. Well, we got some more coming. Another interview coming your way next week. And between now and then, I'll always do my best to reach out, interject good information into the markets, entertain and enrich lives. Folks, thank you all for being here. I truly appreciate your time and your energy and your devotion. I will see you all in the afternoon swing trading room, which is 5 to 6 p.m. Eastern Standard Time. And I will also get you guys, I'll be on the microphones tomorrow and also Friday, as always. Take care, folks. You're amazing. And until next time, love life, live life, be great. Bye.